Even the people that talked about inflation originally, like Keynes, for example, would point out that it partially works because people don't know what's happening, right? If, in some ways, uh, if for example, a government had a 2% inflation target, and they met that reliably, and it was actually reliably measured, you could say that it's not theft in the sense that it's transparent. It's just like it's a type of tax that exists out there, that if you hold money, you're slowly going to lose some of its value to this type of inflation dilution tax. But the fact that inflation happens in a bumpy way, that's not properly measured, that's hard to even properly measure, period, and that in certain regions happens very quickly, makes it in many cases effectively a type of theft, especially when it happens in such a centralized way.
The markets are currently showing signs of uncertainty as the upcoming Federal Reserve meeting in the next month looms on the horizon. There is a growing sense of apprehension, with some also speculating about the possibility of a rate hike in November. However, the key to ending the tightening cycle may be in the hands of the Fed's actions next month. Federal Reserve Chair Jerome Powell reaffirmed the central bank's unwavering commitment to combat inflation at the annual Jackson Hole Symposium. His determination to stay the course without introducing any significant policy changes seemed to resonate, marking a departure from the recent uncertainty that emerged as the U.S. economy accelerated in July, leading to a reassessment of the sustainability of the higher interest rate environment. It appears that traders are now aligning with policymakers, who have consistently conveyed the expectation of one more rate hike. For the first time since the early March turbulence linked to the SVB bust and regional bank crisis, futures markets briefly indicated a potential 60% chance of another policy rate increase, bringing rates to the range of 5.50% to 5.75% by the November 1st Fed meeting. In light of these developments, financial analyst Lyn Alden, author of the recently published book Broken Money, emphasizes the importance of Bitcoin as a hedge against inflation and a safeguard for financial security in the face of challenges posed by the current financial system.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Basically, when we think of Bitcoin, there's like this age-old question, like, what is Bitcoin? Because it's like Bitcoin keeps revealing new facets of itself to us, or at least if you go back at like the Bitcoin talk forums, most of these things that the market is still discovering were like addressed early on, and different facets of Bitcoin take on more meaning once something gets developed, like say Lightning, or when AI comes around, or when stablecoins are invented. These sort of things add new ways to think about Bitcoin or to use Bitcoin. The way I would describe it is basically what a blockchain is a decentralized database, and it just so happens that the killer app for a decentralized database is money, because money is constantly looking for what is a ledger we can all agree on. We might agree to use dollars because it's the fiat currency of the most powerful country in the world right now. We know that over the course of the next 6 months, they're probably going to be fine dollars, and so we can use that workably enough. We might use gold because we both understand that it's the commodity that's best kind of useful as money. And with a database, when you find one that's sufficiently decentralized and immutable, and you say, wait a second, this is basically money in a decentralized cloud. I can hold a unit of this or units of it, and I can either send it to anyone, or I could remember my words and travel around the world and reconstruct my ability to access it there. And so there is that utility aspect. And I think the vast majority of its long-term usage will be for money, just because money is such a big application and it's so suitable for it. But there are other things like data storage. People have put arbitrary data into the blockchain that they want to preserve there. It doesn't prove that it's true, but it proves that it's not tampered with from the point of insertion. And so it could be putting culturally relevant books in there. It could be timestamping other systems into it. Whatever the case may be, I think that is a long-term use case that I expect it to be smaller than money. And then there's other things. Like you can use it as a network. Like you can use Lightning as a network to run around stablecoins, for example, in a way that is cheaper than Ethereum. That's a similar reason why Tron popped up, is because people wanted to use Tether more cheaply than they can use it on Ethereum. And so generally between Bitcoin and stablecoins on other networks, money's been by far the dominant staying power use case for this whole field of technology. And most other stuff becomes like a narrative and then it's kind of fades away into either obscurity or at least a smaller market. When you look at some of the literature basically like Mises or further back, it's the most saleable good, which means it's basically the most liquid good. Like what good could you bring with you as a bearer asset that you could find someone pretty quickly to take it off your hands at something close to the market price? Like if I have a fine bottle of wine that's worth like, I don't know, $300. If I just wanted to quickly dump that on the market somewhere, most people don't know how to evaluate wine. Most people don't even know. So it's a very specific type. And so I'd have to find someone and probably give it to them for like $100 or something like that, because I'd have to find someone who basically there'd be a lot of slippage in that transaction unless I happen to find this like right wine shop, right? So it's like unless there's certain areas where I could get full retail price or full price for it, but the ease of which I can do it is low because there's low liquidity, low fungibility, that kind of thing. So when you have a good money, you have one that's got plenty of liquidity, plenty of accessibility. And the fine line there is if you have a money that is not divisible enough or not fungible enough or is like hyper rare, like it's like rhodium, for example. Most people don't have any. Most people don't identify it, and so just because it's super rare doesn't mean it actually gets monetized. And so it's kind of a weird accident of history that the things that get monetized are things that are quite rare, but that they're already widely held. And so those tend to be things that are hard to make, but that they're long lasting once they're made. And so we build up pretty significant stockpiles.
The United States Securities and Exchange Commission is approaching critical deadlines for deciding on 7 spot Bitcoin exchange-traded fund applications. With the recent SEC defeat in AU South Federal Appeals Court against Grayscale Investments, the stage is set for these decisions. Bitwise, an investment firm, will receive the verdict on its ETF application by September 1st, while BlackRock, VanEck, Fidelity, Invesco, and WisdomTree are all eagerly anticipating the SEC's rulings on their respective funds by September 2nd. Valkyrie is slated to hear back from the SEC on September 4th. The U.S. Court of Appeals ruling on August 29th, deeming the SEC's rejection of Grayscale's application as arbitrary and capricious, marks a pivotal moment. However, it's crucial to understand that this ruling doesn't obligate the SEC to approve Grayscale's application or those of future applicants, as highlighted by Bloomberg ETF analyst James Seifert in a recent interview. While Seifert acknowledges that Grayscale's victory bolsters the prospects of success for the next wave of applicants, the timeline for the SEC's decisions remains uncertain, as the regulatory body has the discretion to postpone them. The SEC has 2 additional proposed deadlines for each fund before it is compelled to make a final decision on the 240th day post-filing for the pending applicants, all set for mid-March next year. In the wake of the August 29th ruling, the SEC has a 90-day window to either file an appeal with the U.S. South Supreme Court or seek an en banc review, where a full circuit court can potentially overturn the ruling issued by a 3-judge panel. Nevertheless, the SEC's course of action moving forward remains unclear. Should the SEC opt not to appeal, the court will be tasked with specifying how its ruling should be implemented, potentially involving an instruction for the SEC to approve Grayscale's application or, at the very least, revisiting it. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.